Hi everyone, it's Chad about with another video. Today I'm going to be talking about Boeing. Obviously Boeing has had a terrible few years in light of the 737 MAX crisis, and then of course during the pandemic no one really wanted to buy new airplanes, so Boeing really suffered terribly. Down 33% in the last 365 days, down even heavier from its 5-year highs of over $400 just before the 737 MAX crisis. It's been losing to the market recently, but has still been an excellent compounder over the longer term, has a strong track record over the very, very long term. Can this household name and industry titan make a comeback? Let's see. I want to analyse this company. I want to look at the most recent report, the business environment, some financial numbers, and then look at its balance sheet, its valuation, and decide whether this company is investable or if it's still miles away from being a proper company again. This is from the most recent report and is how Boeing see their own business environment. February 2022, cargo traffic was 12% above 2019 levels, so we're actually seeing growth there from 2020 and 2021 being abnormal years. If you remove them, 2019, the most recent normal year, if you like. February 22, cargo traffic 12% above. That shows nice growth in the cargo and getting back to normal. What is worrying is passenger traffic compared to a percentage of 2019's numbers. It's just nowhere near where it needs to be. In Asia Pacific, it's about 40% of where it was in 2019. North America, about 80%. Still, as you can see from that graph, a couple of other examples, still nowhere near where it needs to be to create positive growth for Boeing. They continue to see over the longer term, of course, this will return to normal and will eventually become a tailwind over time. Only a very small percentage of people in China actually have a passport, for example. This is a huge potential market. There will need to be more airplanes in the future, and Boeing should be able to capitalise on this by creating commercial planes. But for now, they are struggling in this department for sure. The war in Ukraine is creating near-term challenges for them, and they are really working hard to mitigate a supply chain disruption, because this is an incredibly supply chain intensive business. There's a lot of parts from a lot of different suppliers that go into making a Boeing plane, a lot of raw materials, and they are struggling with supply chain issues, as you would expect. Boeing announced its first quarter results today. Just three key metrics to look at: operation cash flow, core loss per share, and revenue. Revenue down from $15.2 billion in Q1 2021 to $14 billion in 2022. Not impressive at all. Lower defence volume is the main reason for this. While shown on the next slide, commercial airlines was about flat. Defence took a hit here, but this is still unacceptable for this type of company, especially considering defence should be the area that is least affected at the minute. Some supply chain issues, blah blah blah, still unacceptable for this type of company. Core loss per share is expanding. It almost doubled actually the loss per share, so this is again really unimpressive. They will continue to blame supply chain issues, some charges from the defence side of the business, but again, completely unimpressive. Operating cash flow was previously a $3.4 billion negative in Q1 2021. Now it's a $3.2 billion negative. It's coming down, but I'm not going to give them any praise for this, because that really is still pretty poor if you ask me. For the commercial airplane section of the business, as I mentioned, revenues $4.3 billion in Q1 2021. In Q1 2022, $4.2 billion. I'm going to call that flat for the purpose of this, because realistically, it's not that much difference. Operating margin negative 20% and negative 20.6% in this year. So continuedly not impressive. Basically, they're just not producing enough planes to capitalise on the economies of scale here. They expect a global safe return to service of the 737 MAX to happen soon. It's nearly complete, and they expect the production rate to increase to 31 per month by Q2, which is good. Don't get me wrong, but it's just not where they need to be. They need to be producing more planes. 787 certification plan to the Federal Aviation Authority. They recorded a $312 million abnormal cost in the quarter, but they still anticipate around $2 billion total. So again, this isn't good. Producing at a very low rate until deliveries resume, gradually return to 5 per month, which is still at quite a low rate. They've launched the 778 freighter with an order from Qatar Airways. The 779 first delivery now expected in 2025. They have a tremendous backlog, and that is real saving grace for the company. 4,200 airplanes valued at $291 billion, all in backlog, orders already placed. They only delivered 95 airplanes this year, and 86,000 aircraft. With 95 airplanes, they really need to get these numbers up, and that is, of course, there are challenges, supply chain challenges, but these should be easing over perhaps towards the end of the year, if not next year. And they need to get a good handle on this if this is a business going to start producing in the near term. This was previously a very cash generative business, and they spent a lot of money buying back shares and paying a dividend. Cash on the balance sheet right now has decreased slightly from the previous year, from the previous quarter, down from $8 billion to $7.4 million, but those marketable securities have nearly halved. So the total cash-like and liquidity on the balance sheet fell from $16.2 billion to $12.3 billion. That's quite a significant drop, around 25%. They still expect to have sufficient liquidity and still expect to be cash flow positive in 2022, and will remain focused on strengthening the balance sheet. So basically, they don't think they'll have to take on too much debt, too much more debt that is, because right now they're at $56 billion in debt on the balance sheet. That's a pretty grim cash debt ratio, and they don't want to dig in any more into that cash. They need to make this business cash flow positive, and it doesn't look like it's going to be happening for a while. Or, well, if it's cash flow positive this year, it won't be very cash flow positive. Is the balance sheet an investable balance sheet? Well, looking at these metrics, frankly, no. Cash debt ratio, as we've discussed, of 0.28, pretty bad for any industry and very bad for Boeing's history. Has $56 billion in debt and no real way to pay that down in the near term. I don't know what more to say really, but equity to assets is negative. Altman score of 1.36% indicates this is a company that's in financial distress, absolutely in financial distress. Has a return on invested capital that's a negative number. None of this is impressive. From a profitability point of view, also not very impressive at all. A gross margin of 4.84%, which is poor to say the least. Operating margin of 5.44%, which is negative, so not a great number. Net margin of 6.78%, so they're a loss-making company. Negative return on assets, negative return on invested capital, negative return on equity. There's not a lot to be excited about with this business at the present time. Of course, there is a degree of projection needed here because we're expecting Boeing to get back to its previous heights. It's just how long are you willing to wait for this, essentially. And this is part of the reason I have a problem with this business, is on a forward basis, the P is still 42. That's very high for a company that is essentially not growing, and you're going to have to wait on for a long time. It's not buying back shares. It's not paying a dividend. It's not really doing anything. It's just existing and taking away investment dollars that could be spent elsewhere. There's no positives to be drawn from this valuation, in my opinion. I mean, I guess price to sales is 1.45. That's okay. But like, what's that really mean? 4p of 42, which again bakes in a lot of analyst expectations. We can't rely on them consistently hitting targets because they haven't in the past. They're not producing free cash flow regularly. They're not producing strong enough metrics to really do anything with this valuation. You can't possibly do a discounted cash flow analysis of this company, so it's very hard to value it with any sort of optimism in mind. I've tried to look at this with a degree of optimism, but there isn't really much to be had. Very hard to draw a sensible valuation from this. Discounted cash flow is impossible because it's just the cash flows are basically non-existent. Trying to value it, it's valued at 42 times forward earnings. That is expensive. Like, that is baking in a lot of growth, and that growth is just not going to come, at least not in the short to medium term. Possibly over the medium term, maybe in greater than 5 years, we'll start to see this company return some nice growth numbers that can justify that valuation. But you're really willing to leave your investment dollars sat in a company that's trading at 40 times earnings that could well go down in the near future, because that is a pretty big premium, if you ask me, for a company that's not really doing anything. There's still a lot of tailwind, supply chain disruptions. This is such a supply chain intensive business. It employs over 1 million workers for its various guises in the US because of the amount of companies that are in its supply chain. This is a company that is hit so badly by supply chain. It's so dependent on long-term backlogs and commercial airliners wanting to buy planes, needing the planes, and there's just not the demand at the minute, and I can't see that returning for a few years. In which case, this business is just sat still. I just can't get behind investing in that. It's going to be sat still, burning cash most likely, or just about maintaining that. Its debt load is large and not going to come down in the near future. Its balance sheet previously was actually quite nice. Pre-2019, it was okay, and now it's pretty poor. So I just don't think this is an investable business right now. Of course, I'd love to be proven wrong. I'd love for Boeing to rise again, like a phoenix, if you will. And I'd love to hear what you have to say in the comments, because I'm not a financial advisor. This is not financial advice, and you should make your own decisions on this. You should do your own financial research and due diligence. So I'll be really interested to hear what you have to say about Boeing. And do you think the stock can make a comeback in the near term? Because, of course, I think this will be a good investment over the long, long term. But how long are you willing to wait for this to come good to lose the market? That's just my opinion anyway. I'd love to hear what you have to think. I'll see you again next time.